All right, well, happy Monday, everybody. This is Matador from freetradingvideos.com. It is February 9th, 2009, about 12:40 p.m., and we're seeing sort of an interesting day again after a gap down this morning. So we're going to go through some of the broad market work here. We're still knocking our head on this 50 MA on a daily chart, and these lines that were in here from before still make sense. On a very intraday chart, a 3-minute chart, you can see that we had a gap down this morning, a little bit of a sell-off right back to the support area. These lines were in here from before. We're doing a great stair step up, actually from the 85 mark that we were testing last week. Big run up past that, went to the next logical place of resistance, and then the next one, and the next one. So it's a perfect stair step up. If I go to a 60-minute chart, you can see what we were looking at. Here's that 85 mark. There was so much resistance, broken, went right to big red, the declining moving average, and this unfilled gap. That's what those resistance areas were. That's what correlates with this area right here. Stalled there, broke out of that nicely, ran up, even took out the 87 round number, used this as support on Friday and today, and went all the way back up to the round number of 88. Again, this is just the S&P 500 tracking index, the ETF for this, but it's really following the rules quite nicely. And then we're now chewing on this big resistance area, in this area, 87.50. Again, a nice little test up here at the 88 round number. And so the next logical place of resistance to my eye is this round number, and then we've got 89, which correlates to this. So we've got support, breaks, and even takes out the 200 MA around that same time frame. That's going to be a biggie. So watch out if we do break out of this number for that to be an area of overhead resistance. But right now we are holding up. If you look at this chart and look at more data, so for instance, if I right-click format symbol here and look at 24 hours worth of data, you'll see something quite different. So Friday, this is where the market closed. We had a nice run up after the market closed on Friday, so till markets are open from 8 in the morning till 8 at night Eastern Standard Time, and then a huge gap down this morning. Filled that gap, followed all the rules still very nicely, and then when the market opened, it looked like a smaller gap from where it closed on Friday, regular market hours, right here, to where it opened this morning. So the close of Friday, open of today. And so if you take away this after hours trading, which most people don't see, it doesn't look so dramatic, but you and I know something different now, that all those numbers are still important. So big run up, big gap down, fills, and it looks like this. Very nice. So let's take a look at what the trend's doing. They're in the same time frame, and it's actually pretty good. So the trend is still well below 1.0. It's not even showing up now until I scrunch up this chart. Here's a 1.0. So while this is rising, and I'm still seeing more volume flow into stocks that are going up than going down. Again, as this is rising though, be careful how you enter long, because you already know where the overhead resistance is on the broad market. The VIX is interesting, gapped up. At the same time the market's gapped down. When the market's rallied, the VIX dropped off, but now we're hitting this area of support. You can see that very nicely, technically, right there. So the VIX is hitting support again and again. If this fails and heads south, we might get a nice breakout in the broad markets. And I would like to see that with the trend then confirming that by dropping as well. Pretty good. So that's what I'll be looking for this afternoon and into tomorrow. Again, look for relative strength and weakness stocks in the face of all this. And happy hunting. Great to be back with you this week. Talk to you soon.